Hello everybody, this is Toni Turner and welcome to the Market Now as of about 1 p.m. Eastern on Friday, June 29th. Before we get started, please know that all of us at ToniTurner.com wish all of you a very safe and happy 4th of July. U.S. stocks further extended gains today as Nike shares hit an all-time high after the world's largest shoemaker posted a strong earnings report and as banking stocks surged on clearing the Federal Reserve's stress test. The S&P financial sector, which snapped a 13-day losing streak on Thursday, jumped 1.61% after U.S. lenders cleared the second part of the Federal Reserve's annual stress tests. And on that cheerful note, let's go on to three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that closely follows our S&P 500 index. Now we know that the SPY made an all-time closing high of $286.58 on January 26. Since then, it's fallen pretty dramatically. We had a real exciting month in January, and we had all this back and forth, bouncing off of the 200-day moving average, the black line on this chart, bouncing all over, then back up above the 20-day moving average, which is red, the 50-day moving average, which is green, bouncing up and down, lots of volatilities here, lots of duking it out between the bulls and the bears. Then finally started quieting down a little bit in May, started climbing back up, and actually since that April low started to move in a really nice little uptrend. Now that little uptrend has been broken, this particular line, although we can really say that the S&P 500 is certainly still in a bull market. It's certainly in an uptrend. It's trading above the 200-day moving average, which is now coming in at $266.56. It's trading above that support line. And in the last couple of days, this week, it dipped below the 50-day moving average. We consider that to be a pretty important line. That's coming in today at $271.59. So we're kind of looking to that line for support. Again, the SPY is sitting right above it, and beneath its 20-day moving average, the red line here, which is coming in at 275 and change. So the little interim uptrend here, excuse me, again, has been broken. But as you can see, we're still in an up channel line here, an up channel move here. Hopefully that does not break. Hopefully in the coming week the SPY does not move down, fall beneath, let's call it 270 or 269 here, and head back down to the 200-day moving average. It would be great if the SPY could gain more upward momentum as we look to close out the second quarter and move into the second quarter earnings season, which will start in a couple of weeks. So it would be great if the SPY could decide that earnings season maybe would be a good one. So we'll have to see in the coming week how the market takes all this into its perspective. Okay, our next chart today is a chart of the PowerShares QQQ. As you all know, this is the exchange-traded fund that closely follows our Nasdaq 100 index. That's an important index, and its moves are fueled by the likes of Amazon, Microsoft, Intel, Apple, Google, Facebook, that whole group, the FANG stocks we like to call them. Now the QQQ made an all-time closing high on June 17th at $177, right up here and 60 cents. Now when I captured this chart today, the Qs of course have pulled back in the last couple of weeks, and today it's trading at 172.24. So off those highs, and of course in the last week fell back down below the 20-day moving average. Now today, like the SPY, the Qs are sitting on their its 50-day moving average, which is coming in at $169.58. And so that's good. It did, like the SPY, break its little short-term uptrend in here. And actually for us, the 20-day moving average has drawn a real nice trend line here for the QQQ. However, as I said, this past week it fell down below that line, is now holding onto support at the 50-day moving average, and it would be great if it would stay above that and above this channel line here, mainly because this uptrend line that I've drawn, it's touched the Qs in it has touched the Qs, yes, in 1, 2, 3, now 4 places. So that's telling us that this is a pretty strong trend line so far. Of course, we've got the help here of the 50-day moving average. It would be best if the if the QQQ can stay above this level at 169.58. That would be best. But and the Qs are still in an uptrend. Certainly, in the coming week, we will see if the Qs can continue to ride above the 50-day moving average and perhaps even move back higher in anticipation of good earnings toward its all-time high, or if it needs to noodle around and wander around and perhaps settle down in a little more before that earnings season begins. And now let's go on to a chart that I don't think we've looked at in a while. Excuse me, I found this today. I didn't find a whole lot of sectors that look good to me right now, but one that may show some promise if the other ones don't look good is the VanEck Vectors Gold Miners ETF. It has, excuse me, 50 holdings in it. In the top holdings are Newmont Mining, Barrick Gold, Franco-Nevada, and Goldcorp. Now, I believe we looked at the VanEck Gold Miners ETF earlier this year, and I thought it would move higher. It had a strong move up in April, but could not hold above this 200-day moving average. So got above it for 5 or 6 days, couldn't hold, fell down below after making these lows down here, supported about 20. It kept pulling back, made a lower high here, made a lower high here. But now it looks like it's found support here right around the $21.80 area and had a big move up today. Now, excuse me again, if in the coming week the market starts getting a little weaker, if that does happen, it's quite possible that the gold miners will start up here. I'm keeping an eye on it, and in the coming week, again, if the market sees weakness, and that is common in July and August, by the way. I can't remember how many times over this more than 20-year career of mine I've said August lows, August lows, August lows, and it doesn't mean it's going to happen by any stretch, but a lot of times the market, and you know, a lot of people are on vacation, the market will get the summer doldrums going, and sometimes it pulls back a little in July and August. So if the market tends to pull back a little bit or gold gets going here, when I captured this chart today, the GDX was trading at $22.35. It's trying to get over the 50-day moving average, which is coming in at $22.38. If it can do that, if in the coming week the GDX can move above the 50-day moving average and head toward the 200-day line, we've got the RSI moving higher here. The MACD is neutral, just under its zero line, but it will move higher if the GDX moves above the 50-day moving average. So again, if the GDX starts up here and it looks like it's going to shine a little brighter, I may be purchasing shares with my initial protective stop is going to be down here at $21.65, $21.65. And I'll probably leave that stop there for quite a few days, and then if the GDX moves higher, can rise above the 50-day moving average and head up over the 200-day, then I'll gradually raise my stop up beneath the 50-day moving average and use a trailing stop on this. So you may keep an eye on the GDX, see if it starts to shine a little brighter in the coming weeks. And now for this coming week's economic reports, but first, please join us this coming Monday, July 2nd, for our next session of Toni's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available just a few minutes after the session ends to all of our members. For more information and to join, go to tonysmarketclub.com. And now for the coming week's economic reports. On Monday, we have the ISM, or Institute of Supply Management, index. On Tuesday, we have auto and truck sales. On Wednesday, the market will be closed for our July 4th holiday. On Thursday, we'll have our usual jobless claims. Then we'll have ISM services, our natural gas inventories, and our usual crude inventories, which of course have been delayed a day, and the FOMC minutes. Sometimes they move markets. On Friday, we're going to have the monthly jobs numbers with the unemployment numbers. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, happy 4th of July. Keep green on your screen. I'm Toni Turner, and this is The Market Now.